We're not going to move over to the fun part, which is pretty much what you guys really want to see, which is now the actual graph, the actual chart, and learning some different type of systems, right? In this lesson, we're going to divide it by two parts. We're going to go over market structure. This first part is going to be understanding, how to read properly the market structure. And then the second part is how to, understand the opposite of the market structure, which is now understanding how does a market switch from a specific trend to another trend, going into more details, right? So in this lesson, I'm going to show you guys some drawings, which I have some drawings right over here, and then we're going to find it in the actual chart. Same step is going to go over the second part of this lesson. So with that being said, let's get right into it. All right, so what is market structure? So market structure is how price move either up or down. And it also shows you who's in control of the market. Is the buyers in control or is the seller in control? So right over here, I have key concept, which I need you guys to pay very close attention and as well write down a lot of notes. So these are the key concepts that you guys need to understand and you guys need to master every single time. Back then, I'm going to tell you guys a very quick story before we get into this. When I first started trading back, I'll say when I was 15 years old, 16 years old. Right now, I'm currently 23 years old. Market structure was honestly one of my favorite lessons that I've learned due to the fact that, again, you learn how to read price. You learn to understand these type of market condition, right? So the goal of this video is for you guys to completely understand. So whenever you guys come into the chart, you guys could already identify where there's a lot of buyers, where there's a lot of sellers, and where to step out, right? So here is the key concept. The first one we have is a higher highs and higher lows. A very quick example. This is exactly what a high, a higher low, and a higher high looks like. Whenever you see price action doing something like this, that means that price is now heading towards the uptrend. What is an uptrend? Just the keyword here, an up. Up is the key word, meaning that market is now heading towards the upside, meaning that bulls is in control. Bulls equal buys, meaning that there's a lot of buying pressure, that your goal is to start looking for buying position. The next one that we have here is a lower high and a lower low. How does it look like? Something like this. We have a low, we have a lower high, and we have a lower low. Lower low, keyword downtrend, meaning that price is now heading towards the downside, meaning that bears is in control. What is the keyword of bears? Selling, right? So whenever price is heading towards the downside, lower lows and lower highs, we're only looking for selling position. Higher highs and higher lows, we're only looking for buying position. Now, the next one that we have here is the sideways movement, which is a range. Price is just moving up, price is moving down, price is moving up, price is moving down. What does that mean? That the market is just ranging. There's no point for you guys to trade this, right? So you only guys want to trade is the higher highs, higher low, which is an uptrend, and then the downtrend. A sideways is something that you guys want to avoid trading. Now, why does it matter? First of all, it helps you read the market and trade with the trend. Like I was saying, once you guys understand market structure, you guys can now understand exactly where there's buyers and where there's sellers. So again, I can't make this up. What do you guys see over here? This is an uptrend, meaning that there's a lot of buying position. What do we have right over here? This is a range. There's no point for you guys to trade, right? What do we have here? We have a downtrend, right? So if you guys can just literally go all the way into the chart, you guys can see how this pattern repeats itself over and over again. And it's very important for you guys to understand because, again, your goal is to trade with the trend. You want to trade where there's a lot of volume. You want to trade with the trend and not against the trend, right? There's a trading saying that goes that trade with the trend and not against the trend, and not go against the trend. Trend is always going to be your friend. So if the price is heading towards the upside, your goal is to only look for buying position. If price is heading towards the downside, your goal is to only look for selling position, right? And then right over here sideways, you don't want to trade this at all, right? Now, you know where to enter, you know where to exit, and you know what to avoid. Now, where to enter, what to exit, what do I mean by that? So let's say you guys are looking for an uptrend. There's going to be specific key levels where you guys want to mark as areas of interest. Areas of interest are areas that you guys are interested in buying the market or selling the market. So for example, we have a high here. We have a higher high right over here. This is an uptrend, right? Your goal is to only look for buy position. So you have to mark important key levels where you guys want to start looking for buy position, right? We're going to cover this later on in this course, but these are the important key levels where you guys want to obviously look for areas of interest, right? So obviously in an uptrend, you always want to look for a pullback. A pullback will now form a higher low. Higher low is the areas of interest where you want to wait for price action to have a reaction and entry confirmation. Once you have the entry confirmation, this is exactly where you guys want to enter the market. Now, where to exit? Your exit is going to be your take profits. Your exit, you're going to always want to profit, or we always guys want to have your profit at the previous highs, right? And then what to avoid. The avoid part, we're going to go over that in the next lesson, which is understanding, you know, the switch structure and the break structure, which is now telling you guys, hey, this trend is now invalidated or this trend is still valid, right? So we're going to cover that in the next lesson. Now, once you guys master market structure, you'll stop guessing where is the trend heading. You'll stop guessing, okay, this is a downtrend, for example, because you saw price heading toward the downside. You think your price is going to continue selling. No, you'll stop guessing and you can actually understand it and you can actually read it correctly. So with that being said, let's go into this drawing right over here that I have a graph drawing over here, and let's get started with this lesson. Now, in this part of the lesson, my goal here is to make sure that you guys understand it correctly. Again, write down a lot of notes, go back, rewatch this video over and over again until it finally clicks in your head. But the goal in this video is for you guys to understand how to identify these points. So check this out. We're going to go over 3 different types of trend. We have an uptrend, we have a downtrend, we have a range. We have the higher highs, higher lows, highs and lows, right? Now, your question over here should be like, okay, how can I identify a clear trend? How can I identify if it actually makes sense to buy the market or how to sell the market or where to stay away, right? So going over this left side first over here, this is going to be an uptrend, right? We have a low point, we have a high point, and what do we have here? We have a higher low point, right? So we're going to write this down, high and a low point. We're going to start it, for example, from high and a low point. Now, what do we have next right over here? This point over here is not going to be considered as a higher high. Now, why is this considered as a higher high? The reason why is very simple. It's because this high, right? This high right over here is higher than the previous high, right? So you guys get that. This high here is higher than the previous one. So we have a high here, we have another high, which is going to be bigger, this one. So it's not considered as a higher high. Over here, we have the same exact concept. What do we have? We have a low point, right? But what is the difference between this low point and this low point right over here? Is that this point over here is a higher low because this low is higher than the previous lows, right? And then obviously it just continues adding up. We have a higher high because this high is higher than the previous one. We have a higher low because this lows over here is low, because this lows over here is higher than the previous one. Now moving forward, it just continues the trend over and over again. We have a higher high and we have a higher low because this higher low is higher than the previous one. This higher high is higher than the other one, right? Now, we're back at these zones right over here. This is where I'm going to quiz you guys, right? What is this? Is this going to be a higher high or a high? Now, this over here is not going to be considered as a high. The reason why it's going to be considered as a high, again, it is an equal high. It's not higher than the previous high, or it's not lower than the previous high. It's going to consider as a high. You guys can see it's just a touch and a touch. So it's going to consider as a high point. Now, what do we have here? We break under. Is this going to be a higher low, lower low, or a low? This point over here is not going to consider as a lower low. Why is this going to be considered as a lower low? Because this low over here is lower than the previous lows, right? This low over here is not considered as a lower low because it's lower than the previous low. This one over here is considered as a higher low because this high is higher than the previous low. So again, it's just a same pattern that it's going to repeat itself over and over again. Now we form new highs over here. What is this going to be considered as a high point, higher high point, or a lower high point? This one now is going to be considered as a lower high. Why? Because this high over here is lower than the previous highs. And then again, history is gonna repeat itself over and over again. So right over here, we have a, over here, we have a lower low. This low is lower than the previous one. Over here, we have a lower high because this high is lower than the previous one. Same story. Again, history is gonna repeat itself over and over again in trading. We have a lower low, and then what do we have here? We have a lower high. Now, we're entering this ranges right over here. This is not going to be considered as a range. What is this going to be? This is going to be a little bit tricky question, but what is this going to be? A lower low, a low, or a lower high? This point over here is not going to be considered still a lower low. Why? Because this low is still lower than the other one. You guys can see the pattern. It's still lower than the previous one. Now, right over here, a high point, a low point, or a lower high point. This point over here is going to be considered as a lower high. Why? Because again, this high is lower than the previous one. So now that we're inside this range over here, this is pretty much where the story switches, right? Now what do we have here? This is going to be a lower high, a high, or a higher high. Again, it's going to be the same exact concept as this one over here. It's not higher or it's not lower, meaning that it's not going to be considered as a regular high, right? Because again, these are equal highs. There's no higher highs in this range. There's no higher lows in this range. Price action is simply moving highs and lows, right? So again, this one over here is not going to be considered as a low because these lows, again, right? So check this out. These lows over here, consider it's going to still be the same. My bad. I forgot to mention this part. This is going to be a higher high, lower high, or a lower low. This one over here is not going to be considered as a higher low. Why? Because this low, right? Check this out. This low is higher than the previous one, right? Now, don't get me wrong. There's going to be some times, right? There's going to be traders that, again, just because there's a higher low here that is higher than the previous one, they think that the market is now going to switch its trend. No, there's no switch of trend yet, which, again, this is my favorite part of this lesson, but we're going to go over that in the next one. But just to have an idea, this trend over here is not a buy position yet because, again, we're still stuck in this range. There's no clear breakout. So whenever price is just simply creating lows, highs, there's no reason for us to trade, right? Again, the goal is to trade with the trend. So if price is heading towards the upside, our goal is to only look for buying position. If price is heading towards the downside, our goal is to only look for selling position. Whenever price is doing like this, no point for us to trade at all. Now, we're going to go over here, which is the next part, which is where to enter, where to exit, and what to avoid, right? So check this out. We're going to look for buying position, exactly how to enter a buying position. So very simple. Let me just do this again. In an uptrend, we're heading towards the upside, creating higher highs and higher lows, right? So this point over here is going to be considered as a high. This point over here is going to be considered as a higher low. And then, my bad, a low point. All right, so we have a high, we have a low, and we also have a higher high. This over here is still not yet a valid uptrend, right? So this is a potential uptrend, right? This is exactly where we can possibly look for buying positions, right? So whenever price is doing something just like this, first of all, you do not want to enter the market like this. No, you do not want to enter the market at an impulse move, right? Impulse move is where a lot of traders, they have the FOMO, fear of missing out, because they see that price is heading towards the upside, or it can be vice versa. They can see prices heading towards the downside, and they do not want to miss out of profits, right? But whenever price does something like this, this is where it does two things. Yes, it can probably continue heading to the upside, but again, that's not going to be part of your trading plan. If your trading plan says, I'm going to wait for the next leg, that's exactly where you guys want to enter the market, right? But check this out. We have a higher high, we have a high, we have a higher low. To confirm a valid buying position or valid uptrend, we have to look for specific key levels, right? The key levels, this is pretty much part of my strategy. The key levels are looking for areas of interest, which is either going to be supply zone, demand zone, or support and resistance, right? So in this case, we're going to make it simple. We're going to go over the support and resistance, right? We're going to obviously go over this topic in the next one, but just to have an idea, support is always going to be at the floor, and then resistance is always going to be at the bottom of the market, right? Or at the top of the market. So in this case, let's say we have a support zone right over here. We have another areas of support right over here, right? Now we broke above these highs over here, right? We broke above these highs over here, forming a new higher high. This high over here is now going to be an area of resistance, right? So it's going to be our key level. This is going to be our areas of interest. We now form a new area of resistance right over here, because again, price is just, whenever there's a new high, there's going to be a new resistance. Whenever there's a new low, there's going to be a new support. Now, our goal to confirm a valid uptrend, we always need to wait for the pullback. The pullback is a confirmation, right? If there's no pullback, there's no trade, right? The pullback is simply to retest these broken highs right over here. So if price action comes into these broken highs over here and we retest it, right? We retest it, we see rejection, and we do see a proper entry confirmations, right? The entry confirmation, we're gonna go later on in this course, but check this out. Proper entry confirmation, and it tells you, hey, there's more buying pressure than selling pressure, right? Price action is holding this zone very, very nice. Okay, now that we have all those good confirmations, we're going to enter the market. We place our stop under the previous lows, and we're going to target back at the next high, which is going to be somewhere between like this. Perfect. Now we just let the trade do its thing. We're going to let the trade do its thing, and then obviously if it's good, the market is going to start heading towards the upside, and boom, we confirm a proper uptrend. Okay, now we took the first buy off the first higher low leg. What is the next move? We're going to wait for the same thing. Again, history is going to repeat itself. we're not looking for the same thing that we waited here. We're not going to wait for in the next side. A break above previous resistance, previous structure, previous higher highs, form a new what? Higher low. So again, this one over here is going to be considered as a higher low. Higher lows are going to be areas of support, which is always going to be at the bottom of the market. So a low is going to be a support. So we now form an area of support, which resistance now turns into support. And then history is going to repeat itself. We break above. What do we have here? We have a higher high. This high is higher than the previous one. We have an area of resistance. We get a pullback. What do we form now here? A higher low. Higher low is going to be an area of support. This is exactly where we want to buy the market. Again, same story. We're going to wait for confirmation. We're going to wait for rejection. We're going to wait for entry confirmation. Once we have rejection, entry confirmation, that's exactly where we want to enter the market. Same exact story. We're always going to target the next previous highs, which was the previous highs after this drop right over here. And then obviously the market just continues doing this thing over and over again, right? So you guys can see this, how history is going to repeat itself all the time, right? So this is going to be how to identify a proper uptrend. We need to get the pullback first. So let's just write this down so you guys can write this as a note. Valid uptrend. So it's quick. Valid uptrend. Pullback at area of interest slash areas of interest. Areas of interest is going to be broken previous highs. Right, broken previous highs slash resistance. Rejection of areas of interest. Resistance turns into support. Boom. This is a valid confirmations, right? We're seeing that rejection of the areas of interest, which is resistance, now turns into support, and we have a pullback at areas of interest, which was retest of the broken highs. This is how you guys can confirm a proper uptrend, right? Resistance turns into support. We're holding this level strong. We're rejecting that previous high, which now turns into a higher low. So this is how you confirm it as well. Highs always turns, oh, wrote this wrong. Always turns into a higher low slash support, right? Highs are always turning into a higher low. Broken, let me just do this correctly. Broken highs. Let's just add that. Broken highs. Broken highs always turns into a higher low support, right? Another way to confirm it, resistance turns into a support. Boom. This is how you guys can control or pretty much understand a valid uptrend. So these are only the key levels that you guys need to understand. Right now we're going over the opposite, which is a downtrend. A downtrend, we're creating lower lows and lower highs, right? Oh, another thing I forgot to mention over here is that in an uptrend, we're always breaking above highs, right? Always breaking above highs and forming higher lows, right? So always breaking above highs. Highs turns into support, right? So that's exactly what I have over here. High turns into support. We're looking for buying position. Now we're going to look at the other one, which is a downtrend, right? How to properly understand a valid downtrend, right? So a downtrend, obviously, it is the opposite of an uptrend. The uptrend, we're only looking for buying position. The downtrend, we're not looking the opposite, which is selling positions, right? So obviously, every trend, there's going to be a history of a trend, right? A proper uptrend, right? In the previous past structure, there's always going to be a different market structure, right? Market structure is either going to be a downtrend or it can probably just be heading from a sideways market, right? But let's say in this way, we were heading towards the downside and now market came into an area of interest where there was a lot of rejection, a lot of buying orders, and then price action started having this switch of structure, right? This is going to be covered in the second part, but just for you guys to have an idea, always look left. The left side is always going to be history. The history is always going to repeat itself. History is going to be context clue to tell you guys, hey, this is what price action might potentially do until it confirms 100%. Same thing over here in a downtrend, we're always coming from an uptrend, right? So let's say we're coming from an uptrend and now price action is now having its switch of structure, right? What do we have here? We have previous lows, right? Previous lows is always going to turn into a lower high. So we're going to write that down. Previous broken lows turn into a lower high. Lower high is where we want to sell the market. Higher lows is where we want to buy the market, right? So let's write this down over here. Lower highs equal sell, always. And then over here, higher low, buy, always. All right, so we're gonna write that down for you guys to have that context clue. So over here, we have a high point. We have a higher high point. We have a higher low point. All right, let's just make this an example. And then right over here, we have a lower high. Why is it a lower high? Again, this point over here is lower than the previous one. What do we form next? We now form a lower low. A lower low because these lows over here is lower than the previous one, right? These lows is lower than the previous higher lows, right? You do not want to sell the market right away. Because again, same story. Sometimes market can go against you just because, again, you had the emotion because you did not want to miss out on the profit. And the market can just go against you and then, again, boom, take you out of stop loss, right? Obviously, you always want to wait for the pullback. The pullback is the confirmation. Pullback, let's just write this out. Pullback is always going to be the confirmation. Pullback is always going to be the confirmation to a valid trend. To confirm a valid trend. All right, so make sure you guys are writing this down. Pullback is exactly like this. It just pulls back into the areas of interest. So your areas of interest in this key level, whenever you guys are looking for potential sales position to confirm a potential downtrend, you always need to wait for a pullback at a broken structure. Broken structure in this case is going to be a higher low. So now that we're retesting these higher lows, what are we forming here? Once we get, again, the same story. Once we have the rejection, a proper entry confirmation, then this will be our entry. We want to sell the market at this point over here, place our stop loss above the previous highs, and then target the next lows. Once we have all that good confirmation, then again, we're just going to enter the trade and let the trade do its thing. Same exact story. If it breaks under these next previous lower lows over here, we're now forming a what? A lower low over here. Once we form a new lower low, we always wait for the next lower high. The next lower high is always going to be our confirmations, right? Lower high is always going to be our confirmation. This is exactly where we want to be selling the market. Again, if it has its own exact confirmation, rejection, we have our entry confirmation. Perfect. We're going to enter the market, set our stop loss above these previous highs. We're going to place our take profit at the previous lows. And then again, just let the market do its thing. If it does correctly, boom, we won the trade. And again, we just continue trading with the trend. Again, like I was saying over here, we go all the way back over here. Your goal is to always understand where to enter, where to exit, and what to avoid. The avoid part, just keep this in mind. The avoid part is what we're going to learn in the next part of this lesson. But just keep that in mind. But again, it helps you read the market and trade with the trend. You understand this structure over here. You understand how to properly find a valid bullish trend, an uptrend. You understand how to properly find a downtrend, right? So in this case, I'm just going to copy this and write it down so you guys can understand for the bearish part. So give me 1 second. So make sure you guys write this down. This is pretty much where you guys can confirm a valid trend, valid downtrend, or a valid uptrend. So for the downtrend, again, we have the pullback at an area of interest. The areas of interest is going to be the broken support, right? Which is going to be a broken previous lows. So in this case, we have a previous lows over here, which got broken under, right? The next thing, pullback is always going to be the confirmation to confirm a valid trend. If there's no pullback, then there's no point for you guys to enter a trade. Remember, don't have emotion towards trading. If you see prices heading towards the downside, cool, do not enter right away because again, there's going to be times where the market can go against you or it can go with you, but the goal is to always be disciplined and wait for the right setup to come to you and not you chasing the market, right? So broken low always turns into a lower high. So this higher low turns into a lower high, which means that resistance, right? Support turns into an area of resistance. If we go into an uptrend, pullback again is always going to be at the areas of interest. This is going to be the confirmations. Broken previous highs, which is this one, which is previous resistance, rejection of areas of interest. Resistance now turns into support. Resistance turns into support. This is where we're looking for buying positions. Again, broken highs always turns into a higher low. Broken highs now turns into a higher low. This is where we're buying the market. As you guys can see, it is very, very easy to understand this type of concept. These are just a confirmation that you guys need to understand and really master, right? Because this is how you guys are going to come into the market and identify already a switch of trend, broken structure, and a valid trend, right? In the next part of the market structure, right, we're going to go a little bit more detail how to identify and what to avoid, break a structure and switch a structure, how to identify how did the market do this, how can I avoid this just in case if I want to buy this specific zone or I want to sell at this specific zone, right? So we're going to go a little bit more details, which is it's a whole different change. It's a whole game plan change once you guys understand, you know, the market structure. So now that we pretty much went over these type of drawing, now I'm going to go into the actual chart. I'm going to point out some, you know, areas of interest, like, you know, support turns into resistance, resistance turns into support, understanding the uptrend and understanding the downtrend. So let's get right into it. So jumping into the chart, the first trend that we can clearly see is an uptrend. Price is clearly heading towards the upside, right? Now check out the market structure. We have a low point, we have a high point, we have a higher low point, we have a high point, we have a higher low point, we have a high point, we have a higher low point, we have a high point, we have a higher low point, and the market just simply continued doing the trend over and over again. So this over here is clearly an uptrend. What do we have over here? We have a range. The market is not doing anything, it's just moving highs and lows. Same thing right over here. The market is not doing anything, it's just creating simply highs and lows. Right over here, what do we have? Another sideways market. We have a range. Market is clearly creating lows and highs, nothing going on. And then what do we have? A break towards the downside. We have a low point. We have a lower high point, and then we have the next higher low point right over here. Again, this is going to be a lower high point. Check this out. This is going to be a lower high point because these highs are lower than the previous highs, right? This is going to be a lower low point because these lows over here is lower than the previous one. This one over here is not going to be considered as a higher low point because it's low or higher than the previous lows right over here. So in the next part, like I was saying, this is how we're going to confirm the actual switch of structure and how to identify these, right? But this is for you guys to have an idea. Right over here, if we keep looking towards the left side, let's go all the way to the left side. We keep looking forward. What do we have? We have another uptrend. Price simply creating, you know what, highs, lows, higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Same thing over here. We have another uptrend. Over here, we're now having a downtrend. We have a high point, lower high point, lower low point, lower high point, lower low point, lower high point, and lower low point. Simply see how the market structure literally repeats itself over and over again. What do we have over here? We clearly have another uptrend. Price is simply creating what? These highs, these higher lows, these highs, these higher lows, these highs and these higher lows, and then obviously it just continues going its trend until we have, you know, the switch of structure and the break of structure. Now we come a little bit more over here. What do we have? Another downtrend. We have lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. Over here we have an uptrend. We have a high point, higher low point, higher high point, higher low point, higher high point, higher low points. And then over here we have the sideways trend where the market is just simply creating highs and lows. This is exactly where we want to stay out of the market until we finally have a clear direction, right? This is something that we're also going to cover up because there's a lot of times that price action can actually break under, and then this is where it comes back, because again, the idea once we have a break of structure is to always get the pullback. And this is exactly why I tell you guys, do not enter right away if there's no confirmation. How are you guys going to enter this trade over here? Just because, like I told you guys, just because it went into, broke under these structures over here, right? Just because, again, we have these ranges over here. We broke towards this previous support right over here, which again, the clear idea is to always get the retest. There's no rejection. There's no entry confirmation for us to enter the market. This is why I tell you guys, do not enter the market right away. Always wait for the pullback. Once you wait for the pullback, you got to wait for the rejection. As you guys can see, this support over here was not valid. This was not a valid bearish trend because there was no rejection. There was no confirmation. Now notice what happens. We have a range. We have the, you know, the manipulation. The manipulation is pretty much where the market is manipulating everyone, thinking that the market is heading towards the upside or heading towards the downside. And then this is where we start having to switch a structure. Market starts switching its structure from bearish to bullish to now having the distribution, which is now heading towards the upside. In this case, it's heading to the upside, but as well, it can happen in both parts. We can have the manipulation towards the upside to then head towards the downside, right? All of that is going to be covered up later on in this video, but this is pretty much the idea on how exactly this works, right? And again, history is always going to repeat itself. We're going to have an uptrend, we're going to have range, we're going to have downtrend, we're going to have a range, we're going to have an uptrend, and we're going to have a range. As you guys can clearly see, this is exactly how the market structure works. So now that we covered part one of market structure, how to identify uptrend, downtrend, higher highs, higher lows, lower highs, how to buy, how to sell the market with the market structure. Now, what I want you guys to do is now go into the actual chart. First thing first, draw this in paper. Draw this in a paper, mark this up, high lows, high lows, high lows. Go into the chart and start looking for this exact pattern. Go over it over and over again until you guys master it. Take out the notes and go into it without you having an idea. Make a lot of mistakes. Master that mistakes and start creating new mistakes, right? So pretty much just go over this entire chart. Make sure that you guys clearly understand before you guys move on to the next steps. Hope you guys enjoy this one, and I'll see you guys in the next video.